Hey guys, how you doing? Today I want to walk through like a visualization of basically the purpose of K4. The whole reason why I started this business was because I knew that big financial institutions were overcharging for investments. And so I want to show you a visualization of where your fees are roughly going compared to us and how I made that, work in, today's model to try and kind of be roughly profitable for us and show you where I took the savings from. Because a lot of times people don't really know what they're paying for. And this isn't going to be perfect because not every fund is the same. Not everybody's breakdown of where their fees go is identical. But this is a pretty good rough approximation of what is actually happening out there. And I'm going to give 3 examples. So I'm going to start with a $100,000 portfolio, go up to a $500,000 portfolio, and then go up to a $1 million portfolio so you can sort of see how it starts working along the way. Now, generally speaking, the average MER that most people are paying in Canada is somewhere around 2.2%. That could be higher. Sometimes that's lower. Generally, when you have about $100,000, you're certainly probably not paying that much less unless you're investing on your own, which is great, but then you don't really have access to advice and an advisor. Now, what an advisor should not be is a fund salesperson. An advisor should be somebody that is helping you with planning and not telling you that this fund is going to beat this fund or whatever. We have absolutely no idea. Sometimes you get lucky, your fund wins, then you look like a genius. Sometimes you lose, then you look like the worst advisor. I really want to get away from people thinking that we have anything to do with what the returns are. The market is going to do its thing. So in a $100,000 portfolio where you're paying 2.2%, about 0.2 of that, or $200, is going towards the fund. It's going towards the fund manager, the guy or girl or team of people that is buying and selling the funds, the operating expenses of that actual fund. About 1% or $1,000 of that is going to the profits of the financial institution, the bank, and obviously they have very large overhead, advertising, whatever, blah, blah, blah. About $1,000 of that is going to the bank. And then the final 1% is going to the branch and the advisor. This breakdown is harder to know. Some advisors are making more, some advisors are making less, but roughly speaking, what you're probably looking at is the branch is going to get about 0.4 of that, or $400, and the advisor is going to get about 0.6 of that, or $600 for $1,000 in total. So you're paying $2,200 per year on your $100,000. Now, the main thing that I wanted to do, and I started K4 at almost the exact same time that companies like Wealthsimple and Questrade and Modern Advisor came into play, because I was like, listen, these guys know what they're doing with building investment portfolios and they're charging way less. So I get to automatically just cut out the profit that, the big financial institution was making off of me selling their funds. That was it. I can give the same advice. It's just like, let's not pay a whole bunch of money to the shareholders of this financial institution and the executives who are getting huge, giant bonuses and making 400 times the average amount of their average employee. I just didn't think it was fair. So in that case, same thing. If you move your money to Modern Advisor and are working with us, this is how it works. If you're paying us fee for service, this isn't how it works. I would be like, go and invest your money somewhere where you're paying less. Don't worry about it, right? Then you can drop your fees even lower. But if you want to pay for some advice and get some advice, we're happy to do that for you. Same thing, same time. the Vanguard, iShares, BlackRock, BMO funds that Modern buys charge about 0.2. Sometimes a little bit less, sometimes a little bit more, but about $200 on your $100,000. You don't see that come off. Modern has a fee of 0.4, so they're going to be charging $400 in this case to build the portfolios, run the website, run the overhead, and a portion of that actually goes to the back end, which is CI Investments, because they are the back end of Modern, who actually have sort of all of the framework of the big financial institution, but at least we're not paying the financial institution 1%, just a small portion that cuts into Modern Advisors' profit. K4 in this case looks like it's charging 1%, which it is, but K4 is not actually profiting 1%. K4 is taking about 0.2 of this, or $200 for, my company's overhead and a little bit of profit, hopefully to me, and then about 0.8 to the advisor. So in this case, your advisor is being paid more, which I think is great. So in this case, K4 is charging 1%, but K4 is not making 1% of that. This is broken down into two sections, which I'll talk about in every scenario where, K4 is going to get about $200 from, this customer or this client, and the remaining $800 is going to go to the advisor. I would rather the advisor be making more money. This just covers a little bit of the overhead that we have, obviously, and hopefully there's a tiny little bit of profit left over that, I can take to the bank at some point in my life and be like, yay, K4 made a little bit of money. So that's where that 1% is going to. When you have a smaller amount of money, it's harder for me to cut that much out and still be profitable. So this was the number that I had to come up with at this price point, at this asset level, is 1%. That's still saving the average Canadian $600 a year, which the savings are going to get larger as your assets grow, which is something that I really thought was important. Just because you save more money or the market does really well or whatever doesn't mean that we should also be, peeling off so much of your money that should be yours. I don't need to make that much money. And I think advisors in this business are way overpaid, especially when they handle large accounts. So when I get into the next scenario, then you're going to see how this starts to break down and I find even more savings. So now we're looking at somebody with $500,000 and the fund is taking the same amount of money. It's taking about 0.2 in both cases, which is $1,000 a year. This you really can't avoid. You can't buy investments for much less than this. There are some Vanguard funds, like some very simple ones or iShares ones, that charge less. But what hasn't happened yet here in a lot of cases, but sometimes it does, is that the bank hasn't reduced their fees at all yet. You're still seeing a lot of people with $500,000 that are paying well in excess of 2% on their management fees, which just blows my absolute mind once you start adding up the actual dollars. So in this case, the bank is still charging that 1%, which is $5,000 a year, just for the pleasure of you being able to have your money on their statements. The investments are roughly identical. They're buying all the same things. This is just profit for them, basically. Obviously, they have some overhead. Now, you're taking the extra last 1% and saying the same thing, roughly the same breakdown of about 0.4 to the branch, which is $2,000, and about 0.6 to the advisor, which is $3,000. So now the advisor's making $3,000. You're paying $11,000 a year in fees, and a lot of this is going to the profit of the branch and the profit of the financial institution. So then my next step was to be like, I'm going to cut out the profit to the branch and the financial institution to reduce the fees even more. And we compare that to us. For example, the fund still 0.2, $1,000. Nothing we can do about that. Modern Advisor is charging 0.4, same percentage as they did before, building the portfolios, doing a bunch of things, having professional management, getting the statements, lots of overhead, whatever. $2,000 to Modern, I think, is a fair cost. Now, in this case, K4 takes, $2,400. That's our max fee that we charge to anybody that is between 50 and 70. If you're younger or older, the fees would even be lower. They'd be $1,800 in total, but I'm using our max fee in this case. K4 is going to get $480, and the advisor is going to get $1,920 for a total K4 fee in this case of 0.48. So now we've taken your MER from 2.2% to 1.1%. And what you're paying us for, or that $2,400, is advice. We're your advisors. I don't care where you have your money. Sometimes I would prefer you have your money where you don't think I'm associated with it at all, so that I don't have to answer questions if the market is bad. Because all I want to do is be able to give you planning and make sure that you're unbreakable and make you make some, good decisions along the way. So that's how that's broken down. In that case, your savings are what? That's $5,600. We've basically reduced your fees in half, almost exactly in half. When you have $500,000, you're paying that high amount of fees. Some people are paying less when they have $500,000, but not everybody. So the last example I'm going to give is $1 million client. Now, generally speaking, I have seen, just a couple of weeks ago, saw a guy with $1 million portfolio. He's paying 2.7%. That's not the example I'm going to give, because most people that have $1 million have gotten a little bit of a savings from the advisor. Sometimes the advisor has to eat almost all of it because the financial institution doesn't want to give up their profits, which I think is absolutely ridiculous, but whatever. But on average, you're probably paying about 1.8% if you have $1 million. So it starts to really add up. The fund, same thing, 0.2, $2,000. Now, the financial institution might have dropped by 20 basis points, so now they're only charging you 0.8 instead of 1%. Their profit on your portfolio every year is a measly $8,000. Now, the branch, they're probably going to take a little bit of a haircut as well. They're going to drop from 0.4 to 0.3. They're charging you $3,000. And the advisor's probably charging a little bit less, so let's call it half a percentage point, so 0.5 or $5,000. Now, I think that it is ridiculous that an advisor seems to be worth $5,000 a year, especially once you've gone through the full initial planning process to just sort of maintain things. They're not doing that much unless you really need help during the year. But some people don't need to make really any changes within a good year. They're just working, they're saving their money, they're putting more money in, the advisor's making more money, the market does well, the advisor's making more money. Our job, now you're just making money for not doing a job, and a lot of it. And so where is the fair point at that, right? Like, how much is our time worth? Because if that person's even putting in, 10 hours, that's a $500 an hour that they're making. That's $1 million a year as a salary to somebody to be a financial advisor. I don't know about you, but I don't think most of the financial advisors that I've met in my life are worth $1 million a year. When I could ask them a question and they'd be like, I don't even know what that means. I don't even know what you're talking about. But so that pisses me off that guys are making this much money or more just by pretending that they're helping you earn the money in the market when the market is going to do whatever it's going to do. So we'll compare that to us, the fund. Again, 0.2, $2,000. Modern Advisor, 0.4, $4,000. K4 maxed out at $2,400. Exact same fee to the advisor and to K4 as was in the $500,000 example, because we're not making any more just because you have more money, because the job is the same. So now you're saving even more. In this case, that's $18,000 a year compared to $8,400 a year, which is still a lot of money. That is a lot of money, but this allows us to be somewhat profitable and still be able to give you good advice that's fair to us. And I believe it's more than fair compared to almost everybody else in the business. Now you're talking about an MER of 0.84% on $1 million portfolio. That drops as you increase. Don't have to invest all your money with Modern. I don't care. I mean, it doesn't matter. You can do whatever you want with your money, as long as I am not upset about the fact that you're paying too much to an institution and a person that aren't worth that much. So, hope that makes sense. If you're paying high fees, you want to give us a shot, we'd love to hear from you. We'll give you a couple quotes. I'll tell you how much money we could potentially save you in fees for free before we even go through anything. If you want to pay for fee for service with us as well because you already have low fees, then great. If you love your advisor and I think that your advisor is charging you a fair amount, but you want a financial planner on the side, then you can view us as saying, I have $1 million portfolio, K4, I could justify paying an MER of 0.24%, once every 2 years or once a year to just get that actual financial plan or retirement plan in place. So there are definitely options. As long as I don't think you're being overcharged, then other than that, I just want to help you with your planning. Otherwise, I'm going to try and convince you that you shouldn't be paying that much money to go to the profits of these giant financial corporations that really don't have your best interest at heart. Cheers.